Hello, everyone. Welcome to the market opening bell for Friday, August 29th, your 10-minute guide to the stock market. Hong Kong stocks continue the downward trend on Thursday, the final trading day for futures, weighed down by significant declines in Meituan, which dropped 5%, and Alibaba, which fell 4.7%. The Hang Seng Index opened 171 points lower, with losses briefly narrowing to 108 points in the morning session, reaching a high of 25,093. However, the decline intensified in the afternoon, hitting a low of 24,808, and the index closed down 202 points or 0.8% at 24,998. This marked three consecutive days of decline, with a cumulative loss of 831 points or 3.2%. The X-share index fell 103 points or 1.1% to 8,916, while the Hang Seng Tech Index dropped 53 points or 0.9% to 5,644. Market turnover reached the 391.4 billion Hong Kong dollars, the highest in over 4.5 months. Southbound trading recorded a turnover of $209.8 billion, with southbound funds seeing a net outflow of $20.441 billion compared to a net inflow of $15.371 billion the previous day, marking the largest single-day net sell-off on record. Notable net purchases included SMIC at 892 million, Akasol at 511 million, Hua Hong Semiconductor at 463 million, China Life at 383 million, Meituan at 333 million, Alibaba at 329 million, Sinuk at 253 million, Horizon Robotics at 241 million, and XDelPi at 224 million. On the other hand, significant net sales included the tracker fund at 11.89 billion, HSCEI ETF at 4.776 billion, Tencent at 583 million, and Xiaomi at 299 million. Data indicates that southbound funds have been net buyers of Meituan for 7 consecutive days, totaling 5.173 billion, and Alibaba for 5 consecutive days, totaling 4.826 billion, or net selling Xiaomi for 5 consecutive days, amounting to 3.1 billion. From a technical perspective, although the Hang Seng Index slipped below 25,000, it held above 24,800. In the short term, the index will face a test to see if it can reclaim and stabilize above 25,000, with resistance levels at 25,140 and 25,270. China's Ministry of Commerce announced that trade negotiator Li Chenggang will lead the delegation to the U.S. On the mainland, the Shanghai Composite Index rose 43 points or 1.1% to close at 3,843, while the Shenzhen Component Index gained 2.3% and the Chinex Index surged 3.8%. Total turnover in the Shanghai and Shenzhen markets reached 2.97 trillion yuan. The renminbi US dollar central parity rate reached a near 10-month high of 7.1063, up 45 pips from the previous day's 7.1108. In corporate earnings, SMIC reported a first half revenue of 4.456 billion US dollars, a 22% year-on-year increase, driven by higher wafer sales and elevated average selling prices. Its gross profit surged 89.3% to 960 million US dollars, with the gross margin improving by 7.6 percentage points to 21.4%. Net profit grew 35.6% to 321 million US dollars, with earnings per share at 0.04 US dollars, and no dividend was declared. SMIC noted that in the first half of 2025, policy changes both domestically and internationally have prompted channels to stock up, with the company actively ensuring shipments, a trend expected to persist into the third quarter. The fourth quarter, typically a slower season, will see reduced urgent orders, but this is likely to significantly affect capacity utilization due to strong overall demand. Barring major external changes, SMIC aims to outperform its industry peers in 2025. Li Auto reported a 2% year-on-year revenue decline to 56.172 billion yuan in the first half, with gross profit slightly down 0.7% to 11.385 billion yuan. Net profit rose 2.8% to 1.743 billion yuan, with basic earnings per share at 0.87 yuan. Though non-GAAP net profit fell 10.7% to 2.482 billion yuan. Newborn Town saw a 40% year-on-year revenue increase to 3.181 billion yuan, with shareholder profit soaring 117.8% to 419 million yuan. Adjusted EBITDA grew 44% to 646 million yuan. Its social business revenue rose 37% to 2.834 billion yuan, with Sugo and TopTop revenues more than doubling, while innovative business revenue climbed 70.5% to 347 million yuan. The overall gross margin improved by 5.6 percentage points to 55.8%, with social business at 53.6%, up 3.9 points, and innovative business at 73.7%, up 18.4 points. Newborn Town's short drama business is showing early success, and its new AI-driven creative content community, AP, allows users to generate websites, mini games, and other interactive content using natural language, marking its entry into the AI agent and AI content community space. Today, a wave of companies will release their earnings in a final push, including the four major state-owned banks, ICBC, CCB, ABC, and BOC, along with PSBC, Bank of Communications, China Merchants Bank, and Min Seng Bank, BOC Hong Kong, Alibaba, BYD Electronic, Great Wall Motor, China Shenhua Yanco, 3S Bao, Microport, Sihuan Pharmaceutical, CR Beverage Media Group, UBTech, CRCC, China Railway Sumian, Weitai Power, and XD Inc. Alibaba will announce its first quarter results for fiscal year 2026, ending June 2025, with expected revenue of 248.4 billion yuan, down 2.1% year-on-year. Non-GAAP net profit is projected to decline 15.5% to 34.4 billion yuan, impacted by intensified competition in the e-commerce food delivery war and instant retail subsidies. Investors will be keenly focused on Alibaba's management for updates on operational guidance, AI cloud computing growth momentum, progress on its AI agent initiatives, specific investment details, including AI capital expenditure and food delivery, instant retail, operating expenses, the duration of delivery subsidies, trends in AI training and in inference revenue, and developments regarding the planned Hong Kong listing of its subsidiary, Zebra Network Technology, which specializes in automotive system solutions. US stocks fluctuated upward on Thursday, with the Dow Jones Industrial Average and the S&P 500 index both hitting record highs. The Dow rose 71 points or 0.2%, closing at 45,636. The S&P 500 gained 20 points or 0.3% to close at 6,501, while the Nasdaq climbed 115 points or 0.5% to 21,705. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, increased by 10 points or 0.1% to 7,791. Nvidia saw its stock declined by up to 2% during this session, ultimately closing down 0.8%. In an interview, CEO Jensen Huang revealed that the company is in discussions with the US government regarding the sale of its Blackwell AI chips to China. The Blackwell chip is currently regarded as one of the most powerful chips available. If Nvidia is to sell these products in China, certain adjustments to the chips may be required to comply with US policies. Several investment banks raised their price targets for Nvidia, expressing optimism about the ongoing AI investment boom, which also lifted other chip stocks. Broadcom rose 2.8% and AMD gained 0.9%. On the earnings front, electronics retailer Best Buy reported a 36% year-on-year drop in second quarter net profit to 119 million US dollars. However, adjusted earnings per share reached $1.28, surpassing expectations of $1.21, while revenue grew 1.6% to $9.44 billion, exceeding forecasts of $9.24 billion. Comparable store sales increased by 1.6%, marking the company's strongest growth in 3 years. Best Buy maintained its full-year guidance, projecting fiscal 2026 revenue between 41.1 billion and 41.9 billion US dollars, with adjusted earnings per share between 6.15 and 6.3 dollars. Full-year comparable store sales are expected to range between a 1% decline and a 1% increase. The U.S. economy grew at an annualized rate of 3.3% in the second quarter, a significant rebound from the 0.5% contraction in the first quarter and slightly above the initial estimate of 3%. This growth was driven by robust consumer spending, with up 1.6% and investment up 3.3%, though partially offset by a decline in government spending down 0.2% and imports down 29.8%. For the week ending August 23rd, U.S. initial jobless claims fell by 5,000 to 229,000 from the prior week's 8-week high, slightly below market expectations of 230,000. Our stock pick today is Fourth Paradigm, stock code 6682. Fourth Paradigm announced its financial results for the first half of 2025, reporting revenue of 2.626 billion yuan, a significant 40.7% increase year on year. The company has aggressively advanced the implementation and application of its AI Agent Plus world model strategy, effectively capturing high value enterprise AI transformation needs. This drove a 71.9% year-on-year revenue surge in its core business, the Four Paradigm Sage AI platform, which generated 2.149 billion yuan, accounting for approximately 81.8% of total revenue. Benefiting from substantial revenue growth and the further release of operating leverage, the company reduced its loss attributable to shareholders to 66.97 million yuan, a 55.8% improvement from 151 million yuan in the prior year. The adjusted net loss narrowed by 71.2% to 43.7 million yuan from 151 million yuan. In the first half of 2025, Fourth Paradigm enhanced its Four Paradigm Sage AI platform around the AI Agent Plus World Model technical pathway, iterating capabilities in agent development toolchairs, intelligent agent frameworks, AI application matrices, and computing power and model resource scheduling. These efforts aim to position the platform as an infrastructure enabling enterprises to fully profit from AI, creating a new AI-driven productivity system. The value of the AI Agent Plus World Model approach was comprehensively rolled out to enterprise clients, with the number of flagship clients reaching 60, up by 4 from the previous year. The average revenue per flagship client rose to 17.98 million yuan, a 56.6% year-on-year increase. In March 2025, Fourth Paradigm launched its fancy consumer electronics business, offering integrated software hardware solutions powered by AI agents. By embedding intelligent agent modules into end user devices, Fancy delivers AI capabilities directly to consumers, collaborating with brands like Bruce Lee, Lamborghini, and Lenovo. Fancy introduced Smart Suite watches equipped with its AI chipsets. Accordingly, partnerships with upstream and downstream industry players led to the launch of smart glasses, earphones, and smartphone back clips. These products are now available through online and offline channels. Beyond new channels, For Paradigm has worked with numerous software and hardware partners to build an interconnected Internet of Everything ecosystem, continuously enhancing Fancy's influence. Analysts recommended a buy price of $61 with a target price of $69 and a stop loss at $58. I do not hold the aforementioned stock.